Welcome back, all my legends. If you guys are new to this channel, my name is G Moore. As you guys know, or if you guys haven't seen my videos, I just talk about entrepreneurship, my businesses, and hope you guys benefit from my videos. And yeah, but in today's video, it was one of my bad experiences of blowing up a Forex account. But I'll walk you guys through what happened. A lot of YouTubers or Forex gurus online, they don't show you when they win, or they show you when they win, but they don't really show you when they lose. So I want to show you guys, the ups and the downs. Everything online right now, I feel like they just show you the good times, and it makes you wonder, like, how come everybody's having such great success, but I'll say a very small percentage of people are actually having great success. And I just wanted to have a channel where it shows you, the good and the bad, so you can actually see the reality, right? So I mean, some people do get lucky, and for example, Amazon, some people launch a product and they start making take a month. But sadly, I wasn't one of those people to kill it at Amazon like they did, or in Forex, where people, they say they make thousands of dollars, but they don't really show exactly how much they made, or the goods and the bad of it. Okay, but today I just want to show you guys my account and the reasons why I went into a live account, and how you can avoid blowing up your first account. Okay, so the reason why I even opened up a live account is because I got too excited, and I was impatient. Okay, so what happened was I learned a new strategy. You know how everybody always talks about that new strategy. Oh, everybody's winning. But what I realized is that people only post up they win, right? They don't post up, oh, I blew up or I lost 10 trades in a row. But when people have a great day, they just want to post it up on their Facebook pages, or um, show that they're having success. But who doesn't want to show off, not show off, but like show that they're doing great, right? But that gives us a wrong perception on strategies on Forex. And yeah, I just went in and I had a successful day of trading. I won like $100 on demo or something. And you know what? Now I'm like, oh, I'm the shit now. And I want to show you guys that the market doesn't care what you think. The market's just gonna do what it wants to do. Okay. But on January, February, March 31st, I deposited my first $500 into my account, and I started to trade. Okay, after I had a successful demo day. Okay, and so I started to trade, and I started doing okay. I lost first trade, couple trade, but then I started to win a couple, as you can see here, and I started to win a couple, and yeah, I was using proper risk management. Point zero 0.04 is not that crazy. Okay, I started to win. You see all these greens here. Started to think I knew what I was doing. And sometimes the market just kind of gives you what you want. It's weird. It gives you what you want, and then you can see here, look what's happening here. Increasing the loss size already to 0.5 loss size. That's $5 per pip on a $500 account. So essentially, that I'm risking. So my stop loss was about 10 to 15 stop loss, and I'm risking about 10% per trade. But look, the worst thing that can happen to you is when you increase your lot size is if you win, because in the long term your account will get blown, as I did. All right, so you see here, man, I'm winning, but you see here, I'm only going for one pip because now my emotions are kicking in. My emotions be like, oh, $5, I'm out, even though it's just one pip. You see here, boom, keep going. Right here, boom, lost $35. All right, so got scared, lowered it again. Got lowered it again and went back to 0.01. Yeah, but anyways, kept going and just did this back and forth, back and forth. Didn't have proper risk management. Didn't know anything about the market or anything. Just knew that it was a new strategy. Everybody was winning because everybody's posting great results. But the truth is, like I said, people don't post when they lose 10 times in a row, right? They only show you, oh, I won 10 out of 10, 9 out of 10. I'm doing great. And everybody praises them. Oh, like, how did you do? How you do it? And I was there at one time. One time I posted, I was up. I won 30 for 30 trades, and I posted up on Facebook. Oh, I won this and that. But a couple days later, or then I went live, and then boom, my account got blown within a couple weeks. All right, so let me just show you guys the trade that really blew up my account. I'm just gonna hit the profit right here. You guys see here, hit crazy. You see here, boom, zero point 0.5. Like I was saying, this one right here is when I blew up my account. I won a 3.0 loss size. So that's $30 per pip. And I think right here, I only had like $300 left in my account. And I went all in and I just freaking, this is the best trading setup ever. That's the worst thing you can do as well too. Because even though it looks like it's the best trade, it can still go against you. So there will always be good setups, but always use proper risk management. Even though it's the best setup, it could be the death setup as well. All right, so I'll show you guys this trade right here. So the trading strategy that I was doing was when it's overbought RSI and it's stochastic, then and it hits the Bollinger Band that I'm gonna sell. All right, so as you can see here, all my rules met. Okay, it went up, it hit the Bollinger Band, RSI, stochastic right here, it went up, and it's on the overbought zone, right? So that means it has to reverse, right? This was one of the best setups I've seen. Not best setup, but like a very clear setup. Okay, like it's a given that can happen. Hit the Bollinger Band, overbought, all right? Okay, so you see here, this candle right here, what I saw was just like this. What happened was when this candle opened, it started to go down. It started going down strong. It went like 3 to 5 pips down, and then I entered when it was in the momentum of 3 pips. Right when it entered, guess what happened? All right. Okay, it started to go up, and then the next candle started to go down, and then I think, oh yeah, I got this, you know. So I was up like 30 to $60 because I was at freaking 3.0 lot size. So 2 pips, you're at $30, or 2 pips, you're already at $60. Going down, okay, I got this, you know. Oh, right here I was going down, okay, I got this. My entry was on the right here, so it was coming back down. I got happy, okay, I'm good, all right. Boom, the candle went up. I think I had like a five stop loss. My stop loss was right above this right here. So when this started to go up, one thing you don't want to do is move your stop loss. So I'm like, you know what? Wow, you see how RSI and stochastic is up even higher? That means it has to come back down. Move my stop loss. Don't move your stop loss. You know, if you have a stop loss set, there was a reason why you set it in the first place when there was no emotions into it, right? So now I'm down like $90 or even more here. Yeah, I was down like $150, and I didn't know anything about your broker closing you out. So I'm like, you know what? I'm just gonna let it ride, and then I'm like, it's gonna have to turn. Okay, the next candle it's going down. Okay, RSI and stochastic going up even more. Boom. Okay, so it dropped. Almost hit my take profit. I was very confident. Okay, whatever. Okay, I'm not gonna close my trade. You know, I'm just gonna hit my take profit. Better yet, it does not. It goes boom right back up. You see how all these emotions are playing in. All right, so she was going back up, moving my stop loss, going back down, up and down roller coaster with this Forex trading. A couple months in, thinking that I was gonna make a hell of money on it. Almost hit my take profit again. Just left it, didn't even touch it because of the spread. It didn't touch it. Look at it. Look how much it's playing with my emotions. Just letting it ride, Okay, just let it go. Right now I'm down like probably like, I don't know, like 10. I'm down like $200 out of my account. It's not even closure. Out of my leverage was like 300, and I had a bonus. I believe I had a bonus on this account. Traders Rate bonus. Don't take any bonuses. Just trade what you have. When you have a bonus, it makes you have a perception that you have more money in your account, so you can risk more. But that's just gonna blow your account. And better yet, it closed my account. It closed my trade right here, and I lost $300, which is my whole account right there, and my account got blew out. Okay. So takeaway from this. Okay, so I actually made a slide. Let me go look at the slide right here. All right, so 5 reasons my account blew up. All right, and I hope it helps you guys to not blow up your account as well. Let me just put this in presentation mode. 5 reasons my account blew up, and something that I hope it helps you not to blow up your account. Impatience, all right? So, like I was saying, I won for a day and I thought I was a shit. Oh, I'm going to double my account. Oh, I'm going to make hella money because I made $100 on my demo account with actually proper risk management, okay? And then okay, so double your demo account for with proper risk management. If you got lucky one trade and you had like a 10.0 loss size and you double your account with like a 10 pip take profit, yeah, you double your account, but it wasn't proper risk management, and that trade could have easily went against you. Okay, I'm not trying to be negative about it, but just be realistic. If you do it in the long run, most likely your accounts are going to get blown back to back to back. And greed was increasing my loss size. You guys saw, oh, it was a perfect setup, and boom, my account got blown. Thinking the market needs to reverse now. Oh, RSI, stochastic, the market's going up so much, so high, it has to come back down. The market can do anything. No risk management. My FX book. Oh, let me show you guys the app on my phone here. So now that I trade, I use my FX book. My FX book is this one right there. All right, so use that one, and you log in, and then on the top left, it has the three lines, and you go to calculators. Calculators. I'm not going to show you guys. You just download the app. You guys know, and then just go to position size. And what I recommend is just risking 1% per trade. People will say 3-5%, but the smaller your percentages, if your strategy works, it will slowly grow, and you can handle more drawdown in your account. Okay, so let's say the $500 account, so 1% would be 1% would be $5, right? So amount to risk, it'll be $5. Stop loss and pip. So depending on your stop loss, it changes your loss size. Okay, so a lot of people just ask you straight up like, if I have $100 account, or if I had a $1,000 account, what should my loss size be? But it depends on your stop loss. If you have a 50 stop loss, it's going to be different from if you have a 5 stop loss, and then you can have a higher loss size because at the same time you're risking 10%. So 10% of 1,000, or 1% of 1,000 is $10, right? So if you have a 10 stop loss, you can have it at 0.01. But let's just say you literally have one stop loss. Never gonna have one stop loss, but I'm just saying, if you have a one stop loss, then you can have a 1.0 loss size, because if you lose $10, which is the same thing as losing 10 pips at a 0.01 or a zero point 0.1 loss size. Okay, so it depends on your stop loss, how many pips you're doing. Okay, but anyways, with this app, when you guys use it, you can enter how many when you want to risk and how many pips you want to risk, so you can calculate. And on the bottom, under standard lots, right here, I don't know, you can't see it, but it'll tell you what your loss size will be, so you can stay consistent with trading 1% of your account. Some pairs will when you do 0.1, it's gonna be different. Some pairs sometimes it's only 80 cents per pip. Some are even more. Some are even like $1 to like 20 cents or stuff like that. Okay, so make sure you use that app so you don't blow up your account, or at least your trades stay consistent. Okay. Bad risk reward ratio. I was having a 3 pips take profit with a 15 stop loss. Okay, so I can win 5 trades in a row and then lose one trade, and all my wins get wiped out. So you want to have at least a 1-2-1. So if you have a 1-1, if you win 60% of the time, then you're gonna be up, right? So, but if you have a 1-2, if you have 3, you have 40% win rate. You can still be up with your trading strategy, because you have proper risk to reward ratio. Okay, so some takeaways. One thing too, if you're going to trade and you need that money to pay for your rent, you need that money to pay for your car, you shouldn't trade Forex, because if you're trading Forex to make that amount of money, then you're gonna have a lot of emotions to it. Okay, so but if you're just trading as a side income, so you're just doing it to get better at it, and then you're fine, because you don't have a lot of emotions to it. But let's say if this trade doesn't reach my take profit, then I can't pay off my car. Then guess what's gonna happen? You're gonna move your stop loss, and you're gonna, oh, it needs to come back, and it's not gonna. You're gonna just get your account blown. It's gonna be the worst thing ever. Okay. So I mean, I only put one takeaway, but there's a bunch of takeaway. I just put that as a last little tip. But yeah, that's about it. Double your account with proper risk management, and that's basically the main thing. If you double your account with proper risk management, then you're basically good to continue to go to a live account. And always journal your trades, find out what happened. Don't learn too much. A lot of people learn too much. Sometimes it's the perfect setup, but you just lost because that's just sometimes the market just doesn't do what you wanted it to do. So that's it for today, and hope you guys took something away from it. Comment down below, subscribe if you guys uh, got something from this video. So thank you guys for watching, Legends, and I'll see you guys next time.